Yo, what's good, y'all? This video is going to be, I think, one of my best videos. I can already feel it. It's going to be about psychology because I'm extremely so tilted by price. Like I sometimes get a deep, passionate hate about trading. Really, like it's so triggering. Like trading sometimes, like the what do you call it? Not insecurity, but you know what I mean. Like uncertainty, the uncertainty of price is so annoying, and then you're just waiting for your expectations to be met, and you're waiting and waiting and waiting and waiting and waiting and looking at these candles print. It's so boring. Like trading is look at this, man. Like it is so boring. So I'm a Papa Little Rebel. So this is a heartfelt message on what I wish I heard back in the day, for example, or like just imagine me as a good homie of yours. I'm giving you advice. I hope you apply it. This stuff ain't getting taught anywhere because they don't care about you. They just want your, like, excuse me, I don't know. I don't want to speak bad on other people's name, but most people, their courses are so basic, so useless. Trust me, I've watched a few courses. I want to be the change that I want to see in the industry. So this video, this will really elevate you. So please pay attention. Like when I tell you this stuff, what I teach in the psychology section is more like the model is easy. You could figure the model out yourself as well if you backtest it, if you looked at low probability days. Like if you looked, for example, every time price reaches external range liquidity and stuff, if you studied that, or if you studied, for example, when price reaches internal range liquidity and has a H1 change in state of delivery, like you, if you were 200 IQ like me, you could have figured price out. Figuring price out is easy. The hard part is trading. Like it is really tiring. It's mentally draining. It is so boring. And then, for example, some days you see a candle blast up like this, and then you're not at the chart at that day. Stuff like that. It affects me still to this day. I would be lying if I tell you it did not, because I hate not being in a setup. Like I passionately hate that. What is equal lows? Like when I'm not in a setup and I see it fly and fly and fly, I'm like, wow, really? You're gonna do me like that? And obviously, we as humans, we are extremely selfish. We think we deserve something. We don't deserve anything. We need to be more humble. But people, like, it is not in human nature to be that. Trust me, imagine my YouTube, how much value I dropped, and how many people I helped achieve stuff. And you guys see, the people that helped me achieve greatness, quote unquote, well, it's greatness, not quote unquote, literal greatness. The people that helped me become financially free, I love them and I vouch them and I still support them to this day. But people, like some people getting payouts by me, and they just in my DMs, like come and tell me publicly, bro, that my videos helped you. So it has like a snowball effect. But other than that, let me take a sip. But other than that, I know I've helped a lot of people. I love it. Extremely proud of myself and extremely proud of this mentorship. Like y'all are killing it. What date is it? It's 18th of July. Like I'll be DMing with people in the mentorship, and y'all are killing it. So good job. And if you are new and you're just watching this video later, imagine the mentorship does not even have many people and they are already killing it. So imagine if it's like hundreds or thousands of people. So if you're watching this video, consider yourself blessed. Let's start at the beginning. Your expectations in trading. Every week, listen closely, every week is a weekly candle. Every single week is a weekly candle. You need to have it at the back of your mind that every single week is a weekly candle. So first of all, don't FOMO, because every single week there is a weekly candle going in some kind of direction. Now, obviously, sometimes it is not your model, but why would you care? Because every single week, I'm gonna repeat myself, every single week there is a weekly candle. Obviously, some weeks, let me give this a nice white color. Now, obviously, some weeks are going to expand a lot. And then some weeks, you're going to be so triggered. And the weekly candle is going to expand, for example, like this week, into a higher time frame key objective. And then the people that are looking for continuations are going to get wrecked. The weekly closure. Why? Because this piece that the other weekly candles have, it did not come here. And for example, we might reach a higher time frame objective and still the candle will expand. And those days you will be like, wow, really? And these stuff is what will separate you from a good trader to a bad trader. If you realize that you just need 20 pips of this candle, just 20 little pips, if you realize that, you will be miles, kilometers, light years ahead of every single other trader in this industry. So please listen to me carefully. I'm going to repeat myself because I know some people, like, they don't realize what they have. This mentorship is a gold mine. Now, obviously on YouTube, I dropped sauce, but I didn't go this in depth. What I'm dropping you right now, you should study these videos, rewatch them, rewatch until it's drilled in your brain. Like until you can hear my voice saying, you just need 20 little pips. Because what is our average stop loss? It's in between 8 to 10, something like that, sometimes even less if you have a good entry. If you catch 20 pips, that's a 1 to 2 minimum. If you are break even for the week, you out traded 95% or 99%. I don't know the statistics, but you out traded everyone. All these noobs on Twitter that post a win, they just won one trade, bro. They lost like 20 before that. Trust me. Like, trust me, I've been talking to a lot of people in this industry. Like, that sounds a bit cringe. Industry sounds like a job, but it is trading industry at the end of the day. No, it doesn't sound cringe. Let's just keep it at that. Industry. I've spoken to many people, and trust me, they are. You might think someone is doing so well, but trust me, I've spoken to enough people. Like, just realize these people that are flexing on Twitter. What are they flexing? Their success. That's why I love low-key people. Like when you see low-key people and they keep posting consistent win after win after win after win without flexing funding or payouts, you know that funding and payouts are normal for them. That's how I see it. But like every person is different. That's why I don't like flexing. Like you guys can guess. I'm keep it mysterious. It's just not good. And other than that, evil eye is real. And like when you post something out on the internet and you get like, let's say 10,000 views, you're going to have that subconsciously in your mind. Like 10,000 people have seen me. 10,000 people, like a lot of people are envious. So you're going to have like that envious feeling of people showing jealousy. Because why, if I post something amazing, tens of thousands of people are watching it, but only 1,000, like for example, only 100 likes, only 80 likes. Something doesn't add up, right? Like obviously some people don't like to like, but don't often like stuff on Twitter. But still, if something helped you, I'm clicking like, I'm supporting, I'm even dropping comments and stuff. So that's why if you see people after this candle, after we reach a high time frame objective, and let's say this is week one, scenario 1 and scenario 2, okay? This right here. When this happens, you're gonna be like, unlucky. It was not my model. I don't care. I don't care at all. They're gonna journal and then you're gonna watch how many times when it reaches a high time frame objective. I'm not saying daily external range liquidity, but I'm saying like an objective like this. Why? Because if this is a market maker model, now we have finished the market maker model. So when we finish a market maker model, is it logical for price to keep surging up? It is not. Like everything is a market maker model. Like for example, right here, we finish the sell model, we go back to a buy model, we reach this round liquidity, we have a change in state of delivery, we go back, we finish this model, and then we go back up, we finish this model. Obviously, sometimes it may continue, sometimes the market maker models might be smaller than others, sometimes it might deliver less pips, But if you just go by this key of this is a market maker model, right? This looks like an igloo. This is an igloo. Nah, but okay, this is a market maker model, right? And when you let me draw it out. Wait. Well, sometimes it is 2-stage, but sometimes not. But let me just keep it. Okay, look. When you learn market maker models, you're going to learn the previous areas, like previous mitigation blocks, are going to be areas where new orders get paired. So imagine all this run up, smart money is simultaneously selling and obviously buying. They want to get their positions in profit. So they're selling, they're pushing price down, selling, then buying it back up. Well, their sales might still be at a loss, but they don't care because they are in net profit. Why? Because they just baited the whole world to go up. So when we reach these liquidity pools, your brain should be like, okay, these liquidity pools are areas where smart money is going to exit their positions and then create a new sentiment. And once the new sentiments get created, we are back in external range liquidity. Then we have gonna have a smart money reversal at the lower time frames, and then we're gonna continue again. And then you see these external range liquidities, and price is going to come right there. So ignore this one. I cannot remove that right now. But price is gonna go back into liquidity pools while simultaneously touching external range liquidity, and then you are done. Look at this. External range liquidity. Okay, let me just take this example. So internal, we go to external, and right here it went back to internal. So after this we retrace, come back here, and where do we stop? After we take this and this simultaneously. This one is not that nice, but let's just take this rejection block. Where do we stop? Wait, this is beautiful actually, because this right here also retraces a bit, and then it takes the liquidity, you see? So after we have this H4, internal to external, right? Where does smart money exit? At external range liquidity, simultaneously with the left side of the curve at external range liquidity. Now this is a jam that I wanted to drop. So after price reaches external range liquidity, you go into journal every time. I'm gonna sneeze. I'm gonna mute. Damn, that was a loud sneeze, but someone in the mentorship told me when you sneeze, warn us because my headphones just blew up or something. I got you, bro. I muted up for you real quick. So once we reach a high time frame draw on liquidity, study the other market maker external range liquidity, and study how many times it goes, and study the willingness of price after we reach this. You need to study the willingness, because if price does something like this, creates a fake low, sweeps it, then goes, that's nice. But if price does something like this or something like this, then you know that's red light. And that's why, like what I just taught y'all is the craziest stuff. Your mind should be blown right now. Okay, I'm gonna not put this in the psychology video. I'm gonna put this at what should I call it? I don't know. But what I just taught y'all is the craziest. So this is 30 minutes of sauce. Yeah, I'm gonna close this video right here. Then I'm gonna continue speaking about psychology potentially. Let me think, y'all. Let me think. If I continue. So that's why after we reach external range liquidity, it is low probability. But if we reach external range liquidity and there's, for example, another liquidity pool around, like right here. Let me put this dark red. Let me put this blue. Oh, I don't have blue. I know I'm tweaking out. So exactly like this, when we reach external range liquidity, you can take your profits. But if you are an advanced trader and you know higher time frame narrative, and you know that if we are close to this round liquidity, you can risk it for the little biscuit. You feel me? Like, look at this beauty. Like, just look at this art. Look at the precision of price. Look at that. Like, and then once we reach double external range liquidity type stuff. Now, what I'm teaching y'all, it should be classified information. I'm not uploading this. This is gonna be saved for the 20 bands mentorship. But I'm just like what I just taught y'all. What I just taught y'all is crazy. So that's why once we get into these candles, like this was not my goal. My goal was to just explain you guys that 20 pips is enough. But hey, when 20 pips is enough right here, imagine after you reach a draw on liquidity, you're like, okay, there's a draw on liquidity right here. I just need 20 pips. That's 2 trades. Easy as. Easy as. And sometimes it doesn't work out. Are you going to be sad? No, because you have data collected and you know that the odds of it hitting the second external range liquidity is more than it not hitting it. And then you're going to be happy. But if you're not advanced yet, you take your profits at here, 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 here. You don't watch for price to go up to another external range liquidity that is not inside of this market maker leg. But once you have enough practice, trust me, you are going to be a different beast. Trust me, you are going to be on another level. And show me another influencer, mentor, guru that explains it like this. Show me. They don't, because they didn't study price enough. I know this is the next level stuff. Man, do I upload this? I don't know. I'm gonna pause it right here. And then I'll continue psychology video. Peace.